None of us are cheering for war, um, but the Western world and NATO at the moment feels very vulnerable to outside pressures. And this rearmament process, this restocking, military stockpiles are almost at all-time lows, and the sort of evil powers out there are fully aware of that.
The U.S. under President Donald Trump's leadership has encouraged partners around the world and allies to ramp up military spending. In particular, NATO members are encouraged to ramp up defense spending as a higher percentage of their GDP. Germany has taken this to heart. It wants to now rebuild its military. It wants now the biggest army in Europe. Canada as well, leveraging critical minerals to escalate their defense spending to meet their 5% military spending target as designated by the new NATO target. What does this mean for the critical mineral supply? Which commodities in particular will benefit from this rearmament of NATO? Scott Eldridge joins us once more. He is the CEO of Military Metals, a company that is very much involved in this story. Welcome to the back of the show. Scott, we spoke again. Yeah, we spoke last year, late last year, but let's revisit some of the topics that we spoke about before the new year. Link down below if you want to watch Scott's last interview with me. Good to have you back, Scott. Give us an update on the global defense sector and ultimately why we as investors are worried or should be concerned about what the direction, geopolitically speaking, and ultimately how it impacts us.
Yeah, hi, David. So first of all, it's a pleasure to be back on the show here. And there's definitely lots to talk about since we last spoke about 7 months ago. So going back to 2014, NATO had a defense budget for member states benchmarked at 2% of annual GDP. And as you mentioned, now that is being increased to 5% of GDP by the year 2035. So member nations will be implementing that over the coming months and years. And obviously to go from 2 to 5%, that's a dramatic increase. And you can sort of get into a bit of a breakdown on the numbers. So 3.5% has to be spent on core defense requirements. And then the remaining 1.5% can be spent on broader security spending. And we've seen an announcement here in Canada from Prime Minister Mark Carney, estimating that to be about $150 billion annually for Canada. And he's addressed sort of four different components of how that $150 billion will be spent. But item number two is extremely relevant to our conversation because it's going to be investment into ports, airports, and critical minerals and the critical minerals sector. So that's music to the ears of any junior or operating company that is developing critical minerals projects, in particular, those metals that are key to the defense industry. This 5% GDP commitment could make NATO the sort of unmatched military presence globally, surpassing the capabilities of China and Russia. And what this signals is a shift from diplomacy to hard power deterrence. This could trigger a global arms race with militarized posturing, which is a spark further in the demand side for these metals. And each country will have to sort of dig deep in terms of industrial capacity and the procurement risks for these raw materials. But that's where we can connect the dots and help the government of Canada.
So this is the article here that I'm referencing from the U.S. Department of Defense as of late June. So alliance members, he said, agreed to increase their annual defense spending ultimately up to 5% of GDP. It's vital that this additional money be spent on very serious military hardware, not bureaucracy. So like you said, infrastructure, actual weapons systems, hard deterrent systems. Before we talk about the metals themselves and antimony, which is the metal that your company is involved with, I'm curious to follow up on what you said just now about the arms race that could build up. Now, during the Cold War, there was an arms race between the Soviet Union and the US, but no actual hot war broke out. Potentially, this may lead to more global stability if there could just be an arms race and no actual escalation on the kinetic front, What's your view there? Do you have a view?
Yes, I mean, none of us are cheering for war, but the Western world and NATO at the moment feels very vulnerable to outside pressures, and this rearmament process, this restocking, um, military stockpiles are almost at all-time lows, and the sort of evil powers out there are fully aware of that, thus making a number of NATO countries vulnerable. And the best way to escape from that is this rearmament process. So I think it was much needed, and the U.S. Has been making significant contributions to Ukraine, and they're really encouraging and now mandating that other member states need to participate to the same tune for the collective good.
So this brings us to the main topic of our conversation, which is antimony. It's a mineral that's critical for the production of ammunition, particularly is used as a hardening agent for lead projectiles. Most of the antimony, as we know today, is currently being produced and mined in China, which has uh, banned or partly restricted the export of antimony since late last year. This presents a challenge if the West and NATO allies want to rearm and build up their military. Presumably, they'll need to build more ammunition. And assuming they don't change the composition of ammunition, they're going to need antimony, which is being held in China and not being exported worldwide. What does the West do about this problem, Scott?
Right, David. So maybe just a quick general overview as a refresher on antimony.
Yeah.
So it can be considered a superhero element. It's a key player in modern technology, particularly in the defense sector. It's used in lead acid batteries, semiconductors, flame retardants, solar panels, and 300 different munitions. Um, it's a strategic and a critical material essential for national security and defense. And as you alluded to, the distribution of deposits is not equal globally. And sort of three unfriendly countries to the west, being China, Russia, and Tajikistan, they control about 85% of the world's antimony reserves and production. China is the largest producer. And August 2024, they announced export restrictions of antimony and a few other key metals. And then in December 2024, there was an outright ban of exports to the US. And this banning of exports by China ensures China a steady supply for its domestic needs for both civilian and military. Antimony is a metal that they consider a dual use. So it's sort of a protectionist type move to protect their industrial economy, but also their military needs. And what we're now seeing is the bifurcation of antimony and other commodities in separate markets. So you have sort of a China price, and then you have the rest of the world price. And when we last spoke 7 months ago, the antimony price had shot up from $15,000 US per ton to $38,000 US per ton off of the back of those two announcements from China. And we're now seeing the global price hit $60,000 per ton. So number one, the price has shot up significantly. And number two, US and other allied NATO nations, they simply cannot get their hands on antimony any longer. And we're now at a point where these governments are no longer sitting on their hands, and they're starting to throw their weight around in terms of deploying capital into these domestic projects to move them forward to become antimony producers as soon as possible.
Recently, we saw the Pentagon put in $400 million in investment in MP materials. Surely you've been following that news. America's only operational rare earth mine. That was a couple of weeks ago. Since then, just recently, 2 weeks ago, Apple is set to buy rare earths from the Pentagon-backed MP Materials company. So it looks like, well, the Pentagon, first of all, is not calling this nationalization, rather just an investment into a U.S. project. Are we going to see a lot more of these investments, quote unquote, from the government into existing U.S. projects going forward now, Scott?
Yes, David, and that'll extend beyond the US into Canada and the European Union. And we do hold a project in Nevada that we can mention later. There is a tsunami of capital coming into the critical mineral and rare earth space, particularly in the US. You mentioned MP Minerals, where the US government has taken an equity stake of $400 million. There's a very interesting gold antimony deposit in Idaho, where the DPA Title III has deployed about $60 million US into that, in addition to $1.8 billion from the US Exim Bank. And very recently, there was a transaction announced that really sparked our attention because it's a signal of government capital coming into development stage and exploration stage assets. So a Nevada-based tungsten project, also a key metal for the defense sector, received a $6.2 million US government DPA Title III grant. And that's to fund a pre-feasibility study. So traditionally, what we've seen in the US and other parts of the world, if there's government capital coming into mining projects, it's typically for a contribution to finance the capital costs to actually build the mine. But you only get there and access that money if you have all the permits in place and a feasibility study. So now we're seeing the US government start to deploy capital in the earlier stages of these assets. And this is definitely a trend that will continue, and it will open opportunities for our company having projects in the US, Canada, as well as Europe.
Should investors be excited about this, though? I mean, how is this not just outright nationalization?
Well, if they're taking sort of an equity stake in the company, they're showing that they're putting their money to work, but they could also stand to make a return on their investment. And as long as it's structured properly, they can be aligned with other shareholders as well to achieve the same ultimate goal. If the project comes online and produces, then in theory, the stock price will definitely move north, in addition to supplying the metal that they so direly need. So I see this as highly encouraging and optimistic for the sector, particularly when you see grant money coming in, which is non-dilutive to shareholders, David.
Here's another example of a story here. Guardian Metal Resources, the U.S. Department of Defense awards $6.2 million to Golden Mountain Resources for their Pilot Mountain project. Guardian Metal Resources is very pleased to announce that its wholly owned subsidiary, Golden Metal Resources, has been awarded $6.2 million US from the Department of Defense to accelerate the development of its flagship Pilot Mountain tungsten project. So this is a step in the right direction, like you said, diversifying away from China logistically. But how long do these projects take to actually become operational? In other words, is it too little, too late?
Right. Well, I wouldn't say it's too little, too late. The US government is very late coming to the game, and it feels highly reactionary. But this is also part of a long-term plan that, took a while to come to fruition, as you're mentioning, David. But when you have this serious amount of capital backing these projects, these are decisions that will benefit the US for the next 5, 10, 15, 20 years. So it's muchly needed. It's a little bit late, but it's certainly better than sitting around doing nothing. So again, highly encouraged here, and we're going to continue to see more and more of these transactions, I think.
How long does it take to have a project like this come online and become operational to the extent that it becomes an asset to the U.S. military and the militaries of other trading partners and allies?
Right. So, I mean, that's very project specific. So, the four examples that we talked about, they're all at different stages. But again, the one that you showed on the screen there, the tungsten asset, that's probably the earliest stage asset that hasn't even achieved a pre-feasibility study. So again, these all have different timelines, but for the US, they're trying to accelerate these projects by investing in them, but also decreasing the permitting timelines.
There's been reports that there is a shortage of ammunition and a stockpile of weapons, conventional weapons in the US, especially after a lot of it has been depleted to be given to Ukraine. And given that antimony and some other critical minerals used for the production of ammunition is now banned from export by China, I wonder what the US is going to do in the meantime before some of these projects come online.
Right. Well, I don't think they have a solution for that yet, and those are problems that just really cannot be fixed overnight. Besides looking for domestic projects to bring online quickly, they also need to look for partner nations that can bring on assets very quickly, such as Canada. Um, again, they've depleted stockpiles. There's no question about that. It's challenging to get information on antimony, but anything I've read suggests that the antimony stockpile in the US is probably about 30 days worth of inventory. So it's certainly concerning, particularly for antimony, because there is no alternatives or substitutes for it in these military applications.
You have articles from online sources and blogs like this calling for rare earth investment. The U.S. military is severely short on high-end artillery munitions at a crucial and strategic moment as the calendar turns to 2024. This was written at the onset of 2024. This was not even, maybe developments have worsened the situation. Ukraine using bombs and bullets from the U.S. continues the slog of war with Russia. U.S. continues sending artillery rounds to Israel. All of these conflicts are ongoing as of 2025. So what the article stated in early 2024 is still applicable. So this goes to the industry. You, Scott, you and other leaders of the industry, how are you trying to fulfill this demand?
Right. Well, that's the opportunity for the company and our shareholders. There's an amazing opportunity here for the company to execute on its strategy and move our three antimony assets forward as quickly as possible that are all in NATO nations. We had great timing when we secured these assets just approximately 12 months ago. We did a global search for antimony assets, predicting a situation just like this was on the horizon. Our predictions were certainly accurate. And we wanted to put together an investment vehicle that gave investors a pure opportunity to antimony, because with antimony being a minor metal, not exchange traded, there are no ETFs for it. There's no futures contracts that investors can trade. So the only way to get exposure to the defense metals or rare earths is through the pure equity plays. And the only thing we can do as a company is move these projects forward as fast as we can, and having access to government capital will only assist with that, David.
Scott, give us an update on both of your projects in terms of development and any recent results that you can share with us.
Right. So we just had a news release on our West Gore project, which is located in Nova Scotia, about 50 kilometers outside of Halifax. Nova Scotia definitely has a place in my heart. My grandfather served in the Canadian Navy there in Dartmouth. And we picked up a past producing mine that was contributing to the Allied war efforts during World War I, where they were mining at the West Gore project antimony as well as gold. And they were selling the antimony concentrate over to the UK there in Wales to support the Allied war efforts. And the deposit was never fully exploited. It's still open at depth. It's open along strike. We've identified 3 additional drill targets from geophysics that were never tested in the past. And we've been able to go in there and access historical ore stockpiles. And in the news release, our audience got to see these amazing high-grade results, where there was 3 results of over 18% antimony, the highest grade being 40%, which also included over 100 grams per ton gold. So this would be, by definition, high-grade antimony and high-grade gold. So we're appealing to the gold audience as well. And the real next steps for us at West Gore, David, is that we would like to commence a drill program there. We know it's a mineralized system, a historical mine, and we want to move forward to a resource as quickly as possible. And that will open up the doors to additional capital, potentially from the Canadian or US government.
Have you experienced any changes in attitude towards permitting for your projects or other similar critical minerals projects around North America and Europe following this development with China banning the export of critical minerals, including antimony, and following the escalation of rearmament from NATO members?
Yes, we certainly have, David. Premier Tim Houston in Nova Scotia is very supportive of the mining industry, and he's moving forward a mandate that really wants to see investment capital come into the province there, and that includes fast track permitting opportunities as well. So we definitely see Nova Scotia being a supportive government, and then we're seeing the same with our project in Nevada. And then over in Europe, we have our project in Slovakia, and the EU has adopted an interesting piece of legislation called the Critical Raw Materials Act. And that act states that critical mineral projects are eligible for fast track permitting, where you need to receive an answer on the environmental and the mine permit within 2 years. And that's much needed for the industry across the board.
Okay, and just to give an update on the company performance year to date, here's a stock currently at 54 cents. MILI is the ticker for Military Metals. Investors are wondering what's your next step for adding shareholder value. What milestones can we look forward to next, Scott?
Right. We definitely have a number of milestones coming up in the short term here, David. So as I previously mentioned, we will be commencing a drill program on our Westcore project in Nova Scotia. We are just waiting for our drill permit in Slovakia from the forestry service there. We need to drill 10 infill holes on that project in order to get credit for the previous work that was done under the Soviet era during the 1980s. And this project has Europe's sort of one and only documented resource. And we just need to transition that from a Soviet resource to an NI 43101 resource. But to sort of put it in perspective, there's 60,000 contained tons of antimony in the ground in that deposit. And at today's prices, that's well over $3 billion worth of antimony. So that's a highly strategic asset for Europe. And then thirdly, we have our project in Nevada, which we haven't had an opportunity to talk about, but we also did some recent sampling on that project and found results of up to 10% antimony at surface. This is also a past producing mine that saw production during World War I. And we're just waiting for a structural geologist to come down there in August. And at that point, we would be able to delineate drill targets on that property. So there's a lot going on with the company, a lot of interest from strategic partners, government conversations, and we're definitely moving things in the right direction.
Let's suppose, Scott, that the government says, all right, we're going to give you full access to permit the mine as quickly as possible. And here's a blank check to begin production of your resources ASAP, because this is a matter of national strategic priority. In theory, and under those circumstances, how quickly can we get I'm talking about your resources in particular, how quickly can we get those online?
Right, David. So it's project specific, but for the 3 projects in our portfolio that we've discussed, they would be sort of anywhere between 12 and 24 months to commence construction under those circumstances. Yeah.
Excellent. Thank you very much, Scott. Excellent update for us as usual. Where can we learn more about your company in the meantime?
Right. So I would encourage everyone to have a look at our website, www.militarymetalscorp.com.
Okay. We'll put the link down below. Make sure to follow the company there. Excellent talk. Thank you once again, Scott. We'll speak again soon. Take care for now.
Thank you for having me, David. Take care.
Thanks for watching. Don't forget to like and subscribe.